if you're fearful, you don't make money. Money likes people who are confident, who are really going for it, who are trusting the process. And so don't let this be an opportunity to back away from this time. I think there's going to be more money made in the equity markets over the next 10 years than there has been made in the previous 50. To your point, the brainwashing is so effective that people think that they're here to become consumers rather than creators. Like it's on every billboard, you have to look a certain way. It's on every advertisement.
So, ladies and gentlemen, please permit me to welcome Mr. Jaden Sterling. Hello, Jaden. How are you doing today?
Hey, Chucks, I'm doing great. Thank you. How are you?
I am great. I am great, brother. It's really, really nice to have you on the podcast. What area are you? What side of town are you?
Well, I'm in British Columbia, Canada, and prior to that, I was in the United States.
Great. May we know a little bit about yourself?
Yeah, happy to. So I have to go back to when I was 14 years old. I actually had an epiphany. Chucks, have you ever had an epiphany in your life where like time stands still and you just have a clear knowing of some information?
Yeah. Happens to all
That
of us
happened to you?
sometimes. Yeah.
Okay. Well, I had one at 14, and during that, I knew three things very clearly. It's like I knew, or I was told something happened there, but it was, I knew I'd be teaching about money. I'd be helping people be empowered by money, not enslaved by it. And lastly, I knew that I would be teaching from personal experience, not from a book I read or course that I took. So can you imagine at such a young age having your life purpose downloaded to you? And I have since followed it to a T. It's why I went to school at American University in Washington, D.C. and studied economics and finance. It's why afterwards I went to work on a Wall Street brokerage firm for 10 years. And I learned a lot about money, but not so much from the brokerage firm, Merrill Lynch at the time, but more from my wealthy clients who came through the door with their multi-million-dollar portfolios. And what I learned there was everything I was told from the brokerage side point of view was not how you build real wealth. My clients were showing me they built wealth by having just a handful of stocks in their portfolio. So companies like, now this is back in the 90s, so it was like John Deere, IBM, Johnson & Johnson, the really big US companies that do business globally. And they didn't have a diversified portfolio. They didn't have 100 or 200 stocks. They had 5 to 8 different companies that they continuously invested in and built huge portfolios.
That is so. You're telling me now. If I just speak about some of the things, are you trying to tell me that you worked for an organization, right, that helps people to, with investing?
Yes.
But you didn't really learn a lot working there. However, you learned most from the individuals. Is that what you mean?
That's right. Because the brokerage firm would tell us, when you have a client come in to the firm, make sure that you sell their stocks and buy them all these different assets in order to diversify their portfolio. And over the years of doing that, I realized one day, if my clients had just kept all those individual stocks, their portfolios would have performed much better than their mutual funds did, than their unit investment trust, than their managed money products or treasury bills, treasury notes. So it was just one of those epiphanies, this eye-opening situation so I started doing that too. I bought one stock during the decade of the 90s, and it tripled during that decade, and I turned 70,000 into just under $1 million, and I was able to get out of the brokerage firm and start my own investment company.
Interested. That is interesting. I mean, you've given us, you've you've told us about your entry, right, into this thing, how you got in. Now, why did you decide to walk away from Wall Street and get into Main Street?
Well, the main thing was because what I saw were this incredible inequity of advice, is only like the wealthy could get advice from financial planners. Like, we were told to just turn away accounts that were under $100,000. This is back in the 90s. So
Wow.
$100,000 US back then was, quite a bit of money. And it just didn't feel right to me. I felt like, the masses should know this information, should understand and get at least the right information to help them have some financial freedom in their life. I'm a huge advocate for financial freedom. Freedom is my number one core value.
Mm.
And for those, on the show listening, you may have that high core value as well for you. And you've been probably asking yourself, do I create financial freedom? And it's a great question, and it's not difficult to do. It's why ultimately I left Wall Street and started our software platform that we currently have, and I'm sure we'll talk about.
Yeah, that's awesome. I mean, it's also all about the people, isn't it? It's all about, so basically what I'm getting from you is that you are trying to stop, you're trying to not help the rich anymore. However, you're trying to help the ordinary masses, anybody in the streets, to get rich. Is that correct?
Well, I don't know about anybody in the streets, but I'm trying to assist people who have a genuine desire and interest to break out of what I call the financial matrix, which is the current system that we find ourselves in. And, I always believe a job is an acronym for just over broke. So we're helping people set aside money, invest in world-class companies so that they can start to have more money in the bank. And the more money you have, the better attitude you have. And the better attitude you have, the better life you're going to have.
So what are some things that beginners need to know to confidently start investing?
Yeah, it's a great question. I think the first thing is just do your best to overcome any fear that you might have around investing. And so to understand, if you want to be successful in the financial arena, whether it's real estate, business, in the equities, with stocks, you really need to be comfortable with the idea of taking on some risk. That's really the first thing. And so when you associate risk with return and really building true wealth, then you can start making the money moves that are going to make a difference for you. But I really think that's the first place to start, is redefining in your mind risk and your relationship to it. Because if you fear it or if you don't understand it, then you'll simply avoid any type of asset class which can help you get rich or get wealthy, build financial freedom. And we don't want that. We want you comfortable with the idea of taking risk, whether it's cryptocurrency or NFTs, there's so many different asset classes out there. Heck, even now, gold and silver, buying the actual physical gold and silver is performing really well.
Yeah, yeah. Awesome. There's a lot of myths, right? There's a lot of information out there concerning investing and all that. Yeah. So what are some of the common ones? And then how does SSP help to debunk these myths?
Yeah, I mean, you can go anywhere for information, but how we differ on our platform is I'm sharing 37, I've been at this 37 years, believe it or not, since I was 20 years old. And I've been sharing the knowledge of what I've gained building an investment portfolio of over $1 million, building an investment company of 10.5 million. I ended up doing 125 acquisitions in real estate over a period of 7 years. And we built a very large company back in the early 2000s. And what I've learned is that stocks are the cornerstone for your assets. And then what you do is you parlay those into other assets. So I would do things, hey, this is the Tycoon Show. Let's talk Tycoon talk here. I would do things like I would put my IRA up with the bank as collateral to fund buying an apartment building. I did it with an 8-unit apartment building. And I said to them, look, after you loan me the money for the improvements on the building, I'm going to get it refied in 6 months after I increase the rents, do everything I say I'm going to do with the construction line. and then I want my IRA back. Are you good with that? And they said, absolutely. So it was a no money down deal. They gave me money at the closing table to make them, like new windows, new doors, paint, things like that. And then increasing the rent rolls. And as you know, in real estate, as you increase rent rolls, you increase value of that property. So I didn't have to sell a stock. I got to keep it on my IRA. It was a tax-free opportunity for me that worked out amazingly well. So, as the tycoons out there are thinking about doing deals, look at your current asset structure and see what you can do with that. You don't have to liquidate anything. You don't have to, take a tax hit or pay penalties. It's like, just say, hey, I'll put this up as collateral. You hold on to this for a while. I'll get back to you.
Yeah. And the incredible thing about that is they're holding on to it, but you're still making money from them if people are still probably paying you rent. Isn't it incredible how how the rich operate really? Sometimes the rich borrow money interest free and still make much more money on top of that.
Well, I really looked at, there's always going to be a cost of borrowing money, but I ended up doing deals for affordable housing. And with affordable housing, there are different lenders who will lend money at way better deals. Like I did deals with the city that I lived in, and they gave me grants, didn't have to pay back the grants at zero interest. So it didn't cost me anything, but it's almost like they partnered with me because every city has a mandate to offer affordable housing, and there's pockets of money available if someone's interested. And I always thought, apartment buildings are great because you have one roof.
Yeah.
And you work through the units, you fix them up one by one, but all the other units are paying the mortgage and taxes and insurance and all that good stuff. So I think when you go about it in a way that is leveraging your money, your resources, then I don't think you can go wrong combining the two.
Yeah. That listen, we're here to learn. About the question I asked earlier, people want to know how to make money. We want to be tycoons, and that is one of the reasons why we decided to to start this channel, to teach people how to make money. Let's come back to some things. Your asset. What is this North Star ratings on Finley AI? Just for people who are wondering. What's that?
So when we approached this project back in 2017, I told my partners, if we can create software that allows novice investors to find winning stocks in 3 clicks or less, we'd really be making a difference in the world. And we accomplished that. And we did it through what you referred to North Star ranking. So our North Star ranking is a system that evaluates companies based on their fundamental metrics, their financial metrics, their technical indicators, and then the financial health of a stock. So we evaluate all of that. And then after that evaluation, it spits out a ranking, 1 to 5 stars. 5 is our buy rated. You had mentioned that our performance or our 5-star stocks is up 150% over the averages. Well, that's with our 5-star. Those are like our coveted best of the best stocks that you'd want to buy today. And so the software shows people that information with a final tally score. So someone can literally go on our platform, search a 5-star rated stock, and our Finley that you mentioned is our AI financial coach that's available 24/7. It knows everything about our individual subscriber, their personal values, their interests in what sectors that they want to invest in. It knows what companies are in their portfolio, what's on their watch list, and everything else about the markets. Like it's almost frightening how smart this thing is, that we've dialed in. So it's we like to call it the personal financial coach that comes with our software.
Yeah, that is, smart how AI is coming up now. Can you tell us a little bit more about the future of investing, right?
Yeah.
Now with the emergence of AI, where do you think we're going to with this thing?
Well, you can approach it 2 different ways. The first is looking at companies to invest in that are in AI, right? Like that's a really prominent focus and sector of investing right now, whether you're buying Palantir or Google or Apple. I mean, every company seems to be using the power of AI, some more than others. So that's one standpoint of, investing in AI companies. But the other is in terms of what AI is doing for investing, and it's changing the field. I mean, it's changing the game completely. We are looking at our next iteration for more frequent investors, like kind of like day traders or swing traders. And we're using AI to help with our charting of and define like a low point on the stock to chart to get into. And then our software will tell the investor when to sell. So we know how much it's affecting and changing and up leveling this game. It's actually pretty exciting in terms of what it's bringing to the playing field.
Anything that has a good side must have some negative sides as well. Isn't there a possibility there of, because ultimately I've had a lot of guests come on here and we talk about this thing all the time. Yeah, even in my job, we talk about this all the time. What are the dangers of relying on AI? What are just some of them? There's a lot, but what are some of them that you may be aware of at this point?
I think the most obvious is how many jobs it's going to be taking in the future. When something can become automated with AI, and heck, I mean, even robotics, right? With Boston Scientific, the number one company in robotics, when you've got Amazon cutting 20 or 14,000 mid-level managers, and they're saying because they don't communicate with one another, basically what they're saying is we know we can get rid of these folks because we've automated our warehouses to the extent that we don't need people anymore. And it's kind of scary. Every day in the news I'm reading where companies are cutting their workforce because of automation. So, but on the flip side, and which is horrible for the individual losing their job, but on the flip side is the cost savings for companies is astronomical. AI and they don't call in sick. They work 24/7. There's very little maintenance to do. There's very little overlooking to do with them. And if we don't, it's kind of one of those things where you got to really make yourself indispensable to your company if you're an employee. If you're not, do your best to get something outside of a job, because I mentioned job just stands for just over broke, so do your best to do your own thing, right? That's a beautiful thing about this economy. And or, really trading stocks offers additional income for people. And that's where we see things going, is we offer a platform that we are building out this next level of it, where it's going to be a little more for active traders to buy and sell stocks. If they're making whatever, $300, $400, $500 a day, 5 days a week, so markets open Monday through Friday, then that could make a real impact in their income.
You're not just all about making money for the sake of it as well. There's something you like to engage in values-based investing as well. So how can you align your portfolio with what you care about? I mean, to the people now, how can people align their portfolios with what they care about? Is that possible?
Yeah, it is. In fact, it's actually our very first thing that we do is we ask our subscribers to list their 5 top values. And we've got like 35 there, and they just select them, and then the software is correlated. Every company in our database is correlated to a personal value. So if someone says like freedom and wealth and communication and education and knowledge are their top 5 values, for example, it's only going to show companies that are correlated with those values. So you're not going to end up like buying shares of McDonald's or something like that. It's just going to be very specific for an investor, because we believe that when you're energetically aligned with stock investments, and you really get behind energetically a company and you're like so excited about it because it's made a difference in your life, or because you're perfectly correlated with your personal values, then the investment tends to work out better than not.
Yeah.
Does that make sense?
Yeah, of course. Of course. Yeah, because I think it's something that a lot of us are losing these days. There's no longer that sense of believe in something, or people are no longer too passionate about a lot of things. And even when they are, it is these days often because of what I would call, societal brainwashing. Maybe they've been sort of brainwashed into it, not because, like you said, they had an epiphany or they had that awakening about it. It's just because of some brainwashing that happened one way or the other. And, we seem to have a very soft society these days that really helps to fuel that whole thing.
To your point, the brainwashing is so effective that people think that they're here to become consumers rather than creators. Like it's it's on every billboard. You have to look a certain way. It's on every advertisement. If as long as you drink this beer, you're gonna have a six pack. And it's all these mixed messages that we're getting all the time, but it's specifically designed so you don't feel good enough, you don't feel worthy enough, you don't feel beautiful enough or handsome enough, and it's designed to sell products to people that they don't really need. And it's a shame, but you're right. If someone can just kind of, that's what we call breaking out of the financial matrix, if they can really not be so consumed, like consuming buying stuff, and doing some internal work on, maybe it's self-esteem. Maybe they're buying a bunch of stuff to fill a hole because they didn't feel worthy or deserving as a child, or whatever that is. If they can figure that emotional component out ahead of time, then they can go into making financial decisions based on what their goals are, rather than from a wounded ideology. Does that
Yeah,
yeah, you're
yeah, and
you're
I,
getting you're picking up what I'm putting down, right?
yeah, I actually like that word you use, the ideology. Yeah, because talking about ideology, there's a lot of it's a buzzword now as well. Within the political space and some of these things that we're not gonna get into, so that even YouTube might not put us down as well, because we're not gonna get into some of those things now. Anyway, let's just move on a bit. Let's talk about money confidence and mindset. Yeah. So why is emotional intelligence? Why is it key to financial intelligence? What's the
Yeah, it's a
condition?
great question, man. You hit the nail on the head. Why is it key? Because it is that, when we look at the markets are actually driven by emotion. Emotion is behind the buying and the selling. So when you start to recognize that, oh, the markets are emotionally driven, but we think we've been told it's all based on these financial numbers, the inflation numbers, what the tariffs are doing or not doing, all of these numbers that aren't affecting the markets really one bit. It's the emotion behind it. So when you start to really get control of your emotions and not be so emotional, like really just kind of going about your investing as like very matter of factly, like, okay, I know this is, set yourself some goals. Like maybe your first goal is to pay down debt, like just become debt free, right? That would be a phenomenal objective and goal during this particular time that we find ourselves in. And if that is someone's goal, then they're going to have to go about it not in a robotic way, but in a less emotional way, right? So that they can start to look at, okay, let me figure out where I am right now in my finances. And then, whether that's on a spreadsheet or whatever works for you, and get really clear about that, and then work toward chipping away at that. I remember at a time when I was building my business, I ended up having like 5 or 6 lines of credit and 5 different credit cards, and it became overwhelming. But there was so much money coming in and so much money going out that I just had to have periods of time to float. Once I realized, at that point I was at $400,000 in credit card and lines of credit debt. I thought, okay, I need to track these, and so I made a spreadsheet. I put the name of the company, the bank, the issuer of that line of credit or credit card, the interest rate, the balance, the phone number. And I just started a phone call campaign, and I started asking them, can you lower my line of interest rate? Like what would it take to lower my interest rate? And then most said, yeah, we can do that because my payment history was good. I was on time with everything. So they lowered my interest rate. So that helped tremendously because these interest rates now are crazy, man. They're like in the
Yeah.
high 20s, low 30%. It's just unbelievable. So it gave me a target. I started with the highest interest rate line of credit or credit card, paid that one down first. Then I chipped away at the next one and next one. So I just created a very systematic plan to paying off that debt and not being so fearful of it or emotional. Like, they say, like, if you don't look at something, you can build a mountain out of a molehill, right? That saying, because emotionally you're like not engaged with it. So it feels really scary, but it doesn't have to. Just like investing.
Mm.
It feels scary because Wall Street wants everyone to be afraid of it because they want them dependent on them. They don't want people to be independent. It's not built that way. They want people to be dependent. They
Yeah.
want people dependent on the system, which is the job system. And then they want people dependent on investing in mutual funds and their crappy products that are not giving the returns that people need.
That people actually want. Yeah. You know, they're always selling, always selling products that they know the loopholes, that the
That's
way they
right.
control them. It's incredible how I would say, I would say wicked. I'll use that word, wicked. This word is. It's all about money, 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 money. Yeah. So, guys, this is why we're doing this, guys. So, if you have any comments, if you have any questions at this point for Jaden is always ready and willing to answer. We're going to put, his emails and contact details as well. It's in the description below there. Reach out, comment on the video as well. If there are any questions for Jaden, put your comment there, and I'll make sure that it gets to him on time. We're heading towards home stretch now. We've talked about the mindset there, emotions, how people shouldn't do things on emotions, and the connection between emotional intelligence and financial intelligence. So now, what are a few of the top mindset shifts that can help our listeners today to build wealth?
Great question. First one is start loving risk, taking risk, like just really leaning into it rather than away from it. That's the very first one I would start with. If that's too overwhelming, just become super curious, just like the Curious Tycoon podcast here. Just become curious. And, I always say like become a first class noticer. Notice what wealthy people are doing. Like you just mentioned, there's certain tax advantages to certain investments that the wealthy know about. Well, that's why it worked so well for me when I leveraged my stock portfolio to buy real estate, because then I could depreciate that asset and not pay taxes. I didn't pay taxes for 10 years because I had enough depreciation built up in my portfolio. There's a reason the wealthy own certain investments, and start to become really curious. Like, oh, how does that person do that? How do they not pay taxes for their corporation? What's that all about? And then I think when you become curious that way, you start to ask the right questions. And then life becomes a series of the quality of your life becomes how good are your questions that you're asking of others, right? So I think those are the first few things I would focus on. I would get comfortable with there's good debt and there's bad debt. There's debt that will put money in your pocket, and there's bad debt that will take money out of your pocket. Like good debt could potentially be a mortgage on a property that is below market value. So you purchased it right. You already have built-in equity the minute you close on it. And the bad debt side might look like a credit card revolving line of credit. If you got a Macy's card or whatever you're doing, spending money that way, those won't help you financially at all. In fact, they'll steal every dream that you've ever got. So become really clear about so simple enough. Good debt puts money in your pocket. Bad debt takes money out of your pocket. And so become comfortable with debt, knowing what is good debt versus bad. And then, like I mentioned, the first class noticer. Well, what is that wealthy person doing? How did they build their wealth? The beautiful thing about today's day and age, everyone puts their story online. I mean, you can find YouTube channels like this one. You can find information out there. People write books about their journey. There's just so much information available. We have our software. I'm in there answering questions all the time in our chat with our community. So, come join me there and I'm happy to answer any questions you might have.
Awesome. I was speaking to a guest a few weeks ago, actually, and I was telling her a story, a story that I had of a friend of mine who, just to add as well to, and buttress some of your points about mindset shifts as well. It's crazy how a lot of people do not understand some very basic budgeting procedures, how to sort of manage their inflows, their own money and all that, and how to even understand the kind of expenses that they can have based on where they are in life. And I told my guest a story. So this person spends 140 every 2 weeks to make nails, but then they save 100. And it's just that example. There are other things that I know people do that I hear and I just like, what the hell are you doing? Isn't it incredible how people are bad at just those sometimes very basic money management techniques? Would you say that this is as a result of these things not being taught in school, or what do we attribute this kind of lifestyle to?
In high school, they taught us you can how to write a check, but they never said you had to have a bunch of money in an account to cover that check. That was the extent of it. Now they don't even teach check writing because people don't write anymore. It's all typed out and automated. It's intentional. That's what people have to understand. The lack of knowledge is intentional. I went to school at American University, studied finance, didn't learn anything about money. Nothing. Like, it was crazy. And my education came from real world out there, deal making, working with banks, working with lenders, asking a million questions to every single lender. Like, I think because first of all, they don't charge you for your time like other professionals do. Lenders, when you're looking at borrowing money from a bank, they'll just, you can ask them whatever you want, spend as much time with them as you want as they're willing to give you. And you'll learn so much how the money world really works. So I think it's like, find people who have accomplished what you want to accomplish. My mentor back then was Carlton Sheets. I'm talking way back, like he was a guy who had a real estate course, put it together. It was brilliant. It was all like physical, like his books and manuals and everything. And I just followed it to a T on how to do deals. And that's that's how I learned. So you're not going to learn in a formal way. That's through school. You're going to learn through a way of curiosity, of being interested in wanting to grow your wealth through people who are, crushing it out there. But finding the people who really are authentic is key, because there's a whole bunch of people out there who are saying they're making a bunch of money and they're not at all. So I think it's important to, kind of know who you're learning from. I think is very important.
So guys, anyway, we're all very curious on here, and we want to be tycoons. We want to be leaders. We want to be leaders in our industries. And I'm sure none of my listeners is going to make any of those mistakes, especially after listening to you today. They're going to get in touch and they're going to make sure that they learn from the right person. You've had a lot of wins. There's a lot of real results, and within your own community as well. Maybe share with us some surprising wins or transformations from one person or a few people.
I'm happy to. And we post these on our website too. We get a lot of people who just like literally randomly send us videos, testimonials, and we're so grateful for them. And one that I think of recently that comes to mind was a high school school teacher. His name's Chris Johnson. And he started with our software, and he said he invested I think it was $17,000. Within less than a year, I think it ended up being 6 months, he turned that into $100,000. So we made our 100 grand club, and that was a huge success. So taking someone from zero investing experience, coming into our platform, and then turning 17 grand into 100 was quite remarkable in terms of what he did. And we have those success stories quite often with our subscribers where they've come into the platform. They were either started out afraid to even look at their investments. We have some people who they would take their monthly statements and just shove it in a drawer and not even look at them. And so they've come quite far where then they'll, look at their statements, be able to understand their statements. And now we had a gal, Nola Peacock, who not only reads her statements now, but she manages her entire portfolio. And she's been one of our biggest success stories when we first started.
Yeah, I'm just, having a look at the website now. So guys, this website is going to be on the description below. Find it on the sterlingstockpicker.com/VIP. And these are all real things, as you can see here from Jaden. There are some of the testimonials on here as well. So guys, check this out. This is real. People are making it big out here. Is there anything else that you want to share with us today, just before we round up?
Thanks for the opportunity, Chuck. I appreciate it. SterlingStockpicker.com is the best place to get in touch with me. And in terms of what users can expect, you're gonna identify your core values through this platform. You're going to figure out what your risk level is. So we also have a process for that, for helping people figure out how much risk they can handle. And then we have a system to help people actually build a portfolio to start investing. We call that the portfolio assistant. So basically in the first 30 days, you can expect to start finding stocks that are in alignment with your personal values and that are in alignment with your risk tolerance. And then you start building your portfolio. It's just systematic. Every single month, add to it, I think is really important. And I do want to leave a final message. There's a lot of uncertainty in this market, but as our economy is changing, the market's changing. I mean, we're even talking, in your area of the woods, a central bank digital currency, right, might be coming on, talking about, if Christine Lagarde has it her way, October of this year, you're going to have a CBDC come into effect. And, a lot of countries around the world are going to have this experience of money shifting dramatically. And I think it's going to be important to be, ready for something like that emotionally. Like cash might even go away. We don't know where, we don't totally know what's going to happen here. To not be afraid, to not have fear. If you're fearful, you don't make money. Money likes people who are confident, who are really going for it, who are trusting the process. And so don't let this be an opportunity to back away from this time. I think there's going to be more money made in the equity markets over the next 10 years than there has been made in the previous 50. I think that's how much opportunity we have ahead of us.
That's
so
crazy.
It's going to be crazy good. And people who are geared up for that, who are ready to take advantage of that, you just have to be in it to win it.
Yeah. This is absolutely incredible.
I'm getting an emergency.
Yeah.
That's confirmation that we're going to have a huge equity market coming up. Thank you.
If this episode, guys, has inspired you to invest smarter, start building wealth on your terms, and take back control of your financial future, be sure to visit com/VIP to access exclusive discounts and a free 30-day trial of Jaden's platform. And if you are a fellow Curious Tycoon, don't forget to share this video. Please leave a review as well. It's been nice having you on here. Don't forget to comment. Like I said, if you have questions, comment on the video, share, subscribe to the video as well. And, let people really benefit from this, from what we've done here today. Guys, it's been really good having you on here. It's been good, having Jaden. Thank you so much, Jaden, for coming on.
Thank you, Chuck, for having me.
Thank you very much. Until next time, keep asking questions, guys. Keep building boldly and investing in your own curiosity. Take care. and God bless.